Cool. Fubo. What's up, family? Sean Gillespie. Looks like we starting off with Fubo. And to be honest, I haven't looked at Fubo in so long, bro. Big G Dub. What's up, family? When I was trading Fubo, it was trading super high years ago. I don't think it was that high though. 2018, I started trading Fubo around 2020. Yeah. All right, so let's see. Right now, it's showing a massive gap up. It's probably from, is it from earnings? No. Some type of news popped off. It's damn near been trading around penny stock ranges, but it has a massive pop and looks like it's getting pinned in price action right now. So if we're looking at it on a daily chart, he said Fubo's cooked. If we're looking at it on a daily chart, we got supply setting up right here around 345. And then you had this massive gap up right here from $1.50ish up here to 305, 304. So as of right now, and I'll check out Lululemon too. Fubo and then Lulu. But as of right now, looking at Fubo, um, like I said, prices are getting pinned right now below 345. This is where supply is. And then you had this massive gap up. So I mean, we could see how did the week close. So the week closed bearish. So this candle right here closed engulfing over this candle, which is a bearish engulfing candle. So what you'll want to watch for is how prices actually open in influence with this closing price. So we closed around 290. We'll want to see how prices open next week. It's gonna be bearish until they can take out these highs right here around above 335 ish. So we could see a slow trickle down. Watch for these lows right here to get taken out. So watch for these lows, which is the bottom of this wick right here to get taken out, and then below this 255 level, we could see some more trickling down back down to this $1.50. Um, so that was earnings that it actually started coming back down. So just watch for it to continue to trickle back down. I'm bearish as long as it stays below 345. And then if it takes out these highs right here, that could be it could invalidate this bearish engulfing candle, send it back to a neutral sentiment, and look for a move back up above this 345. But like I said, as of right now, we gap down. It's going to try to push prices back down. Here's the floor right here at 250, 260. Anything that breaks below here, that sets up for the move back down to $1.48, $1.50. That's Fubo, HMR, GME market makers. I look at GME too. Nvidia, don't have hope on Nvidia, man. Just trade the charts because Nvidia don't look good, hasn't looked good, probably still won't look good. But I like Nvidia. They got a lot of cash flow. I think the thing is with them, they taking on so many outside companies. I don't know how that reflects in on the balance sheets or the cash flow, but they've been acquiring so many different companies lately. Every other week, it's been saying Nvidia acquired this company, that company. So I don't know what they got to do with the balance sheet, but they could be my take on it. Why it's not moving like it should be. Lululemon. I used to like Lululemon. Oh, before I jump straight over to that, let me go back to Fubo. Um, let's see if it has any type of uptrend. 6 months, maybe. Very, 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 very tight uptrend. So we'll just see how this lines up on it. So yeah, I mean, like I said, we could see a fall back down here to um, this 148 and feel. Wait for the next pop. It's been testing this bottom trend of the fan since 2023. So it really hasn't moved long term other than, a nice little pop back up to this top fan level up here. And that's normally around like mid threes to $4 ranges. So this is almost kind of like a RX type stock. Load up when it gets down here towards the bottom. You may be sitting on it for a little while. Here's the last level. Last time it had a level of demand here. Here's another level of demand here where it's popping. So anytime it gets back down here below this 148, 150 level, this is just for visual purposes with the fan levels. As long as this trend right here holds at this mid $1 level, then you can hold it, take profits around $4. So back to Lulu. Shit. And like I was saying, I used to like Lululemon. They had, you know, good clientele. They made money, steady money flow. As you can see, if we look back at some of the previous candles, IPO back down here in 2007 at between $10 and $30, and then it finally took off, and here we are pushing as high as almost 518, 516 was the highest. So at one point in time, Lululemon was well, it probably still is. It's just what the economy looks like. Um, let's take that bottom trend right there. That seems to be what it's respecting. Looks like this uptrend right here could be what we're watching for. All right, so far it's had a bullish quarter. Um, last year, this year not so well. It's bearish quarter so far. Over the past 6 months, we are trading below opening price, which is around 380. So it's definitely bearish sentiment right now. We should be heading into a new quarter around Monday or so. So this is going to be what we're going to want to watch for going into this next upcoming week. Right now, it seems like support kind of falls. It kind of falls around this area right here between 296 and 268. So we see a lot of bulls and bears step in. I kind of keep watch of the closing prices and the opening prices, and that's more of a that's more of an agreed price that they like to buy it. So right now, um, like I said, we're headed back down into this area of support here. Could break down a little bit below it, but it's a good possibility that we see it get bought back up. For one, because you see that it's consistent support here. For two, you have an uptrend right here. And then if we break this, we still have a descending channel right here to where it may make lower lows, but it eventually pop back up to the upside. If it does break, normally what you would do is if you would just take it off and then go and find the next area of ascending support. So even if it was to break this one going up, it'll break. It'll still follow this descending channel, but then it'll fall to this next level of ascending support, and it'll bounce back around here. Like I said, it could dip below the support, but it eventually come back up. So this gap down right here is something very important to pay attention to. I didn't even know that it had this, but we've been seeing Lululemon fall since, uh, well, earnings after earnings. So when you see huge gap downs like this, normally the prices don't always recover immediately. Um, you just kind of see a slow consolidation lower until something lines back up. So right now, price action is bearish below 333.83. So right now, I'm not expecting prices to see anything over there right now. This is setting the sentiment as far as what we're gonna expect. Let me see. Earnings was on 327, so just Thursday. So you could see a struggling 3 month span since we just got down, and we're just gonna have to watch to see how levels are gonna play out. Like I said, it's in an area of support. We'll just have to see how this plays out right here. I wouldn't go long right now on Lululemon just because the amount of weakness that it's seen since the 516 highs. I think all of the stocks that's been, Walmart and consumers, things like that, apparel, Nike, I think all of those have been kind of struggling over the past year or so, and Lululemon's not out of the mix yet. So that's how we're looking from a kind of a support and resistance trend line perspective. If I go and I just give you my GAN fan levels, I'm gonna need to find good support without it being broken at the moment right now. I think that'd be the nicest setup for my fan levels. So I'll set up shop right around here. Yeah. I'll set my fan levels right around here with the bottom level of the fan being the trend line. If I can line it up right. And then like I said, also I can go and I can add these deviations. So right now this -3 deviation is kind of lining up with this support area right here. So all of this right here, I kind of consider this a big area of chop zone. But what you could see is the deviations bounce off of this right here. So where it initially spiked to the upside, you could see it drop down and then initially move back up, make that V-shaped recovery back up to retest the bottom of this level, which is about 304. So just want to be careful on Lululemon. Going long is it could be a nice dip buy. Right now, my actual support level though is down here around like the mid 250s, 251. to 255. And that's if we see price action kind of trade, to a level like that. Even if it trades sideways and eventually moves back down, then I'm looking at like 252, 253 being the actual hard support level. And then we could turn around and come back up and retest these levels later on down the line back up to 400. But in a market like this, these next 6 months is going to be very challenging to the economy, especially with all these tariffs and stuff being implemented. Some people say that American-made products are gonna benefit more. I have no clue because we just don't know how everything is gonna play out right now. So just be careful on Lululemon at the moment. And if you keep tapping in with me, like I said, whenever we do this again, then we'll keep reevaluating the progress that it's making. If you're on after hours, you can always comment under one of my posts and ask me to look at something. I'll give you quick reference to buy points and sell points. If you're in the Discord, I can always give you the charts there, or if you're friends with me on Discord too. So however it works for you, we'll keep the progress in mind. HMR, Highmore Maritime Holdings. Um, let's see. IPO back in 2025, highs at $10. Right now it's trading at $3.17. Not giving me much data since it's pretty new on the market. Um, it's chopping right here though. You can call it about right there. So right now this is the chop zone. Not seeing too much upside, not seeing too much downside. Slow uptrend. Here's supply right here at 424. And then they got a couple levels of supply that is broken past that it may not be affected by anymore. But overall, like I said, it's in the chop zone. Um, it's not much of an uptrend yet. It's been kind of a spike. The uptrend is very, very tight. So the same way it spiked to the upside, it could lose levels and break down to the downside. Very, it's got a lot of upside potential though, from the prices that it's trading at right now. So this is just kind of a buy and hold, wait for good opportunities. Oil and gas stock, so I mean, I'm sure it has some potential. All right, so like I said, you could be following this channel right here. Um, so we could be following this path of this channel right here for the meantime, since it is kind of consolidating and being chopped at the moment. We'll want to monitor this pattern right here, see if this holds. If this doesn't hold, then you can see a rollover in price back down here to like the low $2 range. And that'll be where you'll want to scoop up any type of shares. So calls for 417 Lululemon probably could, probably so, depending on what strike price you got. But back to HMR, we just have to watch this right here, this uptrend channel right here, and see if that holds. If so, it'll be a slow consolidation back to the upside. If it builds support back above $4, that'll give it some juice to go ahead and push back towards 558. But it has to get back above this supply level right here. The only thing that scares me is it spikes, but it doesn't have any of these green gap ups nowhere in sight on the charts. And that's what scares me about it because it's not showing like any new money flowing into it. It's just showing like spikes based off of, right now we got oil and gas, Exxon Mobil, probably Schlumberger and a couple other XLE. sector stocks that's pumping, and then this could be just kind of flowing based off of those sectors moving to the upside also. So you just watch it carefully and see how it moves to the upside. If it falls, then you're just gonna watch this break below $3 back down to two, and two will be your next spot to scoop up shares, or however you're playing it. If it breaks above this $4 mark, then you probably be able to hold this towards the probably mid $6 range if you're trading it. So just be careful on that one. I'm sketchy on the price action to be honest, but like I said, it's moving with oil and gas. GME, MSTR. Um, okay, HMO. And I think you said something about, let me see, Big G. Oh, the 417 Lululemon calls. Go back to it real quick. So you got 417 calls. You're gonna have to be smart about the strike price. You can make a few pennies off of it. When I say pennies, you can make a couple dollars off of it if it recovers. But right now, what you're facing, if we go back to the daily chart, it closed red. So what that means is everything's red until, I mean, everything's bearish until it takes out those highs. So right now you're looking at the highs at 304 to be taken out. If you're gonna do anything and you're gonna trade calls, I wouldn't go no higher than 300. That was Friday's opening price. So it could retest those levels, but that's also a level that can be set up for rejection too. And then what happens is it rejects here and then it goes back and retests this level and then it goes and retests these lows. And then if it takes out these lows, then that's when we see it continue to fall even further until you have to go back to old historical levels or price action and see where's the actual um, consolidation or old support levels. So that's the only thing about playing 417 calls. You have to be strategic with your strike price and look for an attainable target to hit and then get out until these highs are taken out. So just be careful on them calls, man. GME. I think GME just had some earnings and it got back down. We looked at it earlier with in the Discord. Um, and this is what I had drawn out so far. Yeah. So right now I had that it gap down. It's in a kind of a ugly bull bear fight, but we're looking at, possibly a bounce around mid 19, maybe $20 range back up to this 25, but I'll clear the charts and we redo the TA with everybody. So looking at this from a bigger time span on a daily, this is how I always start off all my TA. Um, I'm looking just to see what type of consolidation, what type of uptrend, downtrend, what's going on with the bigger picture in the market. So um, nothing's exciting about GME other than playing it for like a nice little spike for a week or two. This went from 1021 up to the new year, and now we're back in the downtrend. So um, looks like you get a nice little vertical movement, short lived, and then back down. It could be something that could be accumulating. I know they're trying to run the micro strategy um, deal with Bitcoin. I don't know much about this. I'm pretty sure if I get New Fish Big Pond talk about it, he'll know plenty of it. But right now, just going strictly off of technical analysis is just, um, I think shares is the way if you're messing with GME. So yeah, it was slight uptrend around there, and it actually kind of reminds me of MSTR charts now that I'm looking at it now since I've been kind of more locked in with MSTR. Buy low 20, sell at 30. Hey, you might be on to some, but yeah, here's the uptrend that we see. Bearish 6 months so far. As far as the quarter goes, bearish quarter, weekly, bearish weekly. So right now the sentiment off of just those three different time frames are telling me that right now the sentiment's bearish. And it's bearish until it gets back above this opening price of 31.87. So right now it's approaching support. A very, very, I'm not gonna call it strong, but it's kind of approaching this floor right here at 2027, 2025, $20.25. So if we see this level gets lost, since most of the trends, the time frames have shown me that it's bearish, we'll look for a breakdown below here, and any type of retest back up here is gonna have to reclaim this 21 or 2027 level as support. If not, then it's going back down, possibly to retest this mid $13 level. Price action and spikes are due to the flow being locked up. It could be. Aaron Morrison about HMR price action. It could be. I don't really look too much into that, but I know a lot of that plays a factor into those spikes like that. So it's very much possible, fam. Um, as far as GME though, you just want to see if this price action right here holds at this $20 range. Um, this is a big consolidation area for GME. This mid area, this is mid zone for GME. Sometimes it breaks below it and it spikes up. Sometimes it spikes above it and comes back down. But this is the area that it looks like that it likes. So it's a pivotal zone. Like I said, the sentiments are all just kind of there. There's a gap down on the daily. I wouldn't take too much into it for one, because you have a small gap up and then you have a gap down kind of in the same block. So that could be a fight right there between the Bears and the Bulls. A -3 deviation sits right below this. So it could be a small fake out, kind of like we saw over here, where it drops below 20. Like Q Master was saying, buy low 20s, sell 30s. Um, if we see this fake out around here, then this could be a nice little area to scoop up for the little snap back to the upside and see if you can make a quick dollar here. I haven't touched GME in a while. I don't trade it because it's just the chart's unreliable, honestly. But some people love it and some people get paid off of it. So these are just my take on it. Play it like that. If I add fan levels to it, which that'll be the only way that I just trust it. Um, I hate vertical movements like these. That's so steep. Because the movements are so steep like that, it makes it. Let me see if I can get a better trend. All right, we'll try this one. So I'm gonna bounce it off of this one and this one to base my fan levels off of. So what that does is it gives us a bottom right here, and then it gives us a top right here. So we might not necessarily see this mid $12 range anymore, but you'll know that if it breaks back above this 32 to $33 range, then we'll see something like this where it breaks out. But this is a challenger price right here. Anything above this, it has to reclaim this level as support in order to make the next move up, which would be, something like something like this back up into like the mid $48 range. So it has to reclaim levels above here in order to make the next move up, or else we'll just continue to see it consolidate around this little floor right here at the $20 level. So that's what GME's looking like so far. Right now, we could keep consolidating within this range. If it breaks down, I have an absolute floor around 13 to mid $12 range. Ceiling right now is around this 33 to $34 area. It's gonna need to set up support here in order to make that move back up. And we do have a gap down right here at 27, 27, somewhere around there. So this is supply. It's bearish. Below there, I don't see any just major candlestick patterns right now, other than this big bearish engulfing candle in retrospect to last week's candle. So yeah, it's definitely getting chopped up. APLD. I did GME. We talked Nvidia. Yeah. All right, so Nvidia hasn't had a lot of luck, especially since the DeepSeek stuff. Gap down, and we've seen it break above very shortly. Then we've seen a giant candle come back crashing down. Um, Looking at it from a 6 month perspective, get all this stuff off. 6 month perspective, bearish candle. Opening price is right here at about a 135, 136. So anything below that, going into the summertime is, the price action is going to be considered bearish. So if you have hope on Nvidia, at the moment being bullish, it needs to get back above this 6 month opening price. It's already broken below two previous 6 month opening prices, and it's trying to push towards um, last 6 months lows here at $90.99. So right now, this is where we are. We broken below 110.18, and the market's continuing to drive prices even lower. STSS, but the markets continue to drive prices even lower. We saw earnings with Nvidia, and it didn't really do much. It pinned prices, and then shortly after that, it started tanking again. So um, as you can see, it's going into the summer. We're still tremendously bearish. It's at 109, opening prices at 136. Going into the quarter, we had a bearish quarter. Um, Not quite a bearish engulfing because it didn't quite take out the highs here. But we did take out the previous quarter's lows. And as of right now, we're finna head into a new quarter. We probably see price consolidate around this month's closing price or this quarter's closing price. We may retest here these highs right here, this quarter's highs, because this is where bulls are sitting at. So these highs are sitting at $97.35. So if we break below the support level here at 104, Let's start going in a little bit further. So if we break these support levels here, is showing at 104. That was around here, these lows. But I have hard support at 101.36. So that's not even showing how you have a gap right here between 74 and 69 that is wanting to get itself to. So just got to be careful. Not saying don't invest in it because we got bought up last time we dropped these to these levels right here at the $96 range and it bounced. So we're heading back towards this, but I mean it's just not looking good at the moment right now. If we lose this 104 level or 101 level, 102 level, I mean I don't know what it's gonna require to get down here, but we could just continue to see a slow trickle to the downside as far as Nvidia goes. And this would be the channel that I'll be watching, the descending channel. So this would be the lower lows that you'll want to watch for. As far as the uptrend, it's not really one. It's oh wow, there you go. Let's change these to be blue. All right, but yeah, that's what we're looking at right now for Nvidia. Price is still gonna be bearish below this 121 level. What stood out big time? It was this right here. On this day, I called out a bearish engulfing candle. I said prices are gonna be bearish until it can break above this 123 level. We came real close here, but as long as we don't break above highs like this, especially when it takes out a previous candle's prices, then I mean this is a setup for long puts back down to the downside until highs are taken out. The same way we got a bullish engulfing candle right here. You was able to take that. We saw the gap up and then a move back up. But once you see something like that counteract what you saw down here, it's time to take it back to the downside. Watch for the sideways consolidation before the dump because prices are going to start to exhaust trying to break back above these highs to invalidate this one candle just to send the price action back to neutral. So if you don't get that, then it's still bearish. It's still bearish until that level's taken out. So we just have to keep watch. Market's weak. We just possibly see this retest this level down here at 103, and it'll probably make lower lows, or we could see some more sideways movement before it decides to drop off the cliff a little bit more too. So not bullish on Nvidia, not by much. We'll just have to see how this new quarter opens up. I'm sure everything on every time frame finished bearishly. Monthly candle red, weekly candle red. It's still an inside candle to this one, but well, not really. It's bearish, bro. I can't make it look good even if I try to. So that's Nvidia MSTR. Got a lot of those on MSTR. Let's clear some of this out. Super volatile. Super volatile. So you definitely have to be careful when you trading this. I still think shares is the way, unless you just have the income or the portfolio size to really just trade this monster. Be careful. So we all know the Michael Saylor story. How he's using MicroStrategy to buy more Bitcoin. Fish loves it. And if he believes in it, I believe in him. But as of right now, we had solid support right here at this let's see, 232 to 223 level. We saw a lot of support hold up during the dip in these areas. We still haven't hit these highs right now, which is at 542, 543, but we've kind of been in a descending channel ever since. So we just have to watch this and see how it continues to play out. Kind of a wedge almost. But the trick is, well, the thing is that we could continue to make lower lows until it finally breaks out. This could be somewhere around the summertime where it finally decides to break out. But as of right now, it's just making lower highs. So we're still gonna go into the following weeks with support levels being around the same levels of 230 and 220. If we decide to break these lows, then we could see prices start to trickle down. So this would be like your midpoint line. And then we'll just see prices kind of trickle back and forth between that. So you can almost look at this kind of like a wedge, but almost like Bollinger Bands. You know, you got the or RSI, however you want to look at it. You got the upper band, lower band, then the middle band. So once you see prices trade back and forth between this middle band, as you can see, it traded above here. It kind of held on to this middle band here. Then once it got below it, it flushed. Once it got back above it, it pumped. So that's just kind of what we're gonna have to watch for on MSTR until something finally happens. I think last time we looked at Bitcoin, it was trading below support. So we could see some more weakness on MSTR. We just have to continue to watch. My thing is watch this 224 level. We've seen it hold up here and here. So we want to watch to see if it holds up here for the move back up to make the lower highs here. So be cautious, be careful. If it breaks out of this trend, then we could set up to go back lower towards this 166, 165 level. So, um, how did it finish in the quarter? So it almost finished. It almost finished kind of. It almost actually closed bullish. Closing price is at 300. Look like. Yeah. Opening price. Well, no, no, no. Yeah, right at 300 is the opening price, and we end up closing around like 288.13. So it barely closed bearish. If it would have closed bullish or closed above this 300, that would have been a nice indicator for another move to the upside, kind of like we saw here. We saw prices close here, which is a bullish close. Um, we seen it briefly dip below that closing price and then skyrocket back up above it. Massive gains, massive gains. So we just gonna want to watch and see this closing price and how it reacts. It could retest this 300 level and then set up for another move to the downside, or we could set up to make a move back up to the upside. But inside of this, coming out of this bearish quarter, going into a new one, just want to kind of be careful on that just to see if we can hold up above these lows. If we break below these lows, that's going to be a setup for us to kind of start pushing back down here within this mid 160 range. So definitely want to watch out for that on MSTR. Um, Next level sports nutrition. What's up? What's happening? EQT. I'll write that down too. Next stock will be APLD, Applied Digital. clear this out. All right, so far, is ain't no way it was trading this low. Maybe. All right, so far, we are bearish from a 6.6 month standpoint. Here's opening prices right here at 782. I had a bearish quarter, bearish month, bearish week, and it's just a big chop zone right now. You get a few dips outside of that, below that chop zone, but it eventually comes back. Um, and then up here rejects around this top pretty frequently. So right now it's just a big chop zone. I don't see a lot of money flowing into it. Here you are with supply right here. Like I said, big chop zone, supply, small level of demand. So we can look for the price to be bought up here at this mid $3 range, 333 to 420, 425. So I don't see anything really interesting unless you're just buying at the absolute lows that you're getting. As far as the uptrend goes, you can take that level right there, apply it to the daily. It's actually trading below the fan levels. Let's see if I can find a better one. All right, so we'll take that one. It's kind of hard to add the GAN fan levels to this just because of the consolidation. So here we got a retest on a fan level down here once, twice. You could see another one come down around, like I said, mid $3 range. Even if it drops below this, if this holds up, it should recover and reclaim trend. I would buy around here. If you want to get the best out your money, buy around mid $3 range, $3.50 range, and just wait for the move back up to this $7 level. But as far as that, it looks like it struggled once it gets above 10.50 to $11. It looks like it has trouble breaking above that level right there. So yeah, not too much. Even over here, it just always had problems above 10.50. So buy when it's super low, $3.50. You can take it back to the upside after that. STSS. Does it cost on the Discord? Yeah, it do. It's $10, man. $10. That's it. If you're on after hours, you can go to my bio, and the link should be there. Um, I try to do stuff like this once a week, but then we got a ton of more people in there that also um, gives real good stuff. Trying to make it. He does live trading every morning. Super fire. So we've been printing off of that, and then of course I post, my morning due diligence, and I do, my normal little swing plays, or if it's just called for intraday, I do a couple of those too. But that's all we charging right now at the moment. It's just $10 to join the family, and I mean, this actually is still is actually a huge steal. So STSS, what is this? Sharps Technology, Health Technology, Medical Specialties. Stay away from this one. Yeah, stay away from this one for now. IPO'd in 2022, highs of 79.64. It's been on a straight downtrend. We were just talking about we were just talking about IPOs and releasing. You got at least 6 months before IPOs normally just take off. I mean, they're still getting price valuation and getting everything priced in. Like I haven't seen one IPO just jump off the rip. So STSS Sharps Technology, just stay away from it. It's no uptrend right now. I can't even apply technical uptrends to it. Just downtrends. There's nothing here. I work the first 3 days of the week and I only trade on Thursdays and Fridays, so it's hard. Bro, I get you. If you had been following me, bro, I'm a mailman. So I deliver mail, run a Discord, give alerts, all of this stuff, man, in the middle of the day. So my trading really it really relies on me to be able to break down these charts as good as I can, set alerts for buy points and sell points, and I rely heavily on visuals and learning price action. So um, I get it. You have to work around. This is year 6 for me on trading, so I've kind of adapted to it over the years. But I get it. It's definitely hard, depending on the job field that you're in and trying to trade, man. If you don't know what you know what exactly is happening, are you looking for like last minute stuff? STSS, I'm not really gonna waste too much time on it, family. Not because I don't like it. It's nothing to really map out right now. It's a failing stock at the moment. So um, EQT, I got EQT and then TTD. Oh, okay. Hey, well, that's the good thing about the Discord. We got a lot of people that does. They in and out of meetings and stuff like that. So we do have alerts set up from the different analysts. So everybody alerts it. So even if you can't really um just actually watch the charts, you'll get our alerts, and then you'll be able to get the entries and the exits too. So take baby steps. You still trying to get your port green. Chip away at those negatives until you get um, something, just something to work with under your feet. And then what I tell a lot of people, once you get you a nice win, set that as your actual trade, like the money that you trade with. So you hit for like a nice 200, $300 a day, you use that money to throw back in there. Don't go over that until you you can snowball those profits. And then 50 to 100 to 75, just nickel your way off the top of that $300 and don't over leverage. Because what happens is you get that 300, you go and you can trade with more than that, and then you dig yourself in a deeper hole. So let big wins be what you use to trade with the house's money, and from there, that's the best way to do it. Even if you have to hit on a big stock and then go down to like small caps, Uber and stuff like that, and take long dated expirations to swing trade those. EQT, energy mineral, it actually looks decent. This gap right here kind of scares me, but as of right now, it looks decent. Little supply right there, so it's struggling to really hold levels above 53. Um, Unlike the rest of the market, technology and everything else, it has a bullish 6 months. Here's opening price at 46, 47. Right now it's sitting at 53. That's nice. It's approaching all-time highs up here at 60. So watch for the rejection if it does continue to pump. Watch for the rejection around 58 if it wants to take out highs. Um, 3 months. It has a nice 3 month candle too. Here's here's the quarter before, last year's quarter. And then here's this month's. So it's been piggybacking off of itself. And as you can see, I tell you guys, watch the opening and closing prices and watch the color of the candles. So if you get a nice, this will be green. I just got it white. But if you see a nice bullish candle here, see where the price closes. It might dip a little bit below the closing price, but it eventually takes back up. And then once it breaks the previous quarter's highs, then we can see a move to the upside and more movement, more money flowing into it. So as of right now, it looks very good. Like I said, it's chasing after these highs right here at $60.69. Had a nice month, but it's consolidating green, red, green. So it's just having some issues at this level right here. So this is your chop zone right now, between 56 and then between 45. So this can become a supply and demand flip if it holds here above the $50.45 level. So I think what it's gonna need to do is gonna need to find another gap somewhere above here. It's gonna need another green gap up above here in order to show that some new money stepping in. If not, if it gets back below here, then you'll see prices eventually trade back to the downside because exhaustion might kick in since it can't push any higher than this. And then once it starts breaking below this 50.45, then we'll see this kind of level back retested around here. Then if it breaks below this $45 and it breaks these lows, um, we probably could be coming back down to this $38 range to fill that to the downside. So um, got some decent support right there at $42. And then of course, like I said, we got some support around here at the $45 level. So you said I'm in on a $50 for next week at a premium of 225. What's your expiration date? Most time I hit around it's 59, and then I see an option I saw make another. And Big G, that happens, fam. That's the luxury of options trading. Sometimes you take, a nice little pocket change, and then you go back and look later, and you done made rent money. But the best thing you can do, just don't go back and look at it. You know, don't go back and look at it. April 4th, that's what, about a week? Yeah, that's next Friday. $50 strike at 225. I have to go look at the data. Normally they don't be that high on stocks like these. And if you're in the money, you probably get like a $40 delta. So, like I said, you got bulls right here, bears right there. It's kind of a power struggle. We'll just have to see how everything lines up. Um, Deviations show that it's in a neutral area right now at this zero. So you might have it. You might have it um, below 47. That's kind of oversold. Above 58, it's kind of overbought. So pushing it, I think you might have it. I think you might have it. So just be cautious. Let's see if I can break this down a different way. Let's get a 3 month look at it. So this gap right here is in a whole nother channel between here and here. So it's gonna have to break down below this $43 level in order to even reach this next level. So your blanket right now is 43. You know, I know that's kind of a long way down. You do have a daily trend right there. Yeah. So you kind of have a daily trend right here that kind of falls in line with this $47 minus three deviation. Like I said, that's kind of oversold. You're in a neutral area, so I can see that because this would be kind of like your middle line right here. If I just estimate, that'd be your upper trend, middle trend, upper trend, lower trend. This would be your middle trend. So as long as it stays above this middle trend, like I said, I think you got it for the push to the upside. Kind of look at it as like a RSI. Here's your 50. If it trades back below here, then that'll be your setup for the push back down to the downside to retest this 46.50. Yeah, that's what you're saying. Probably a push. I think you got it above. As long as it stays above this middle area, I think you got it, and it can make the move back up to about, somewhere around this 58.50 level. So you might be on to something solid. And TTD, trade desk. I remember trade desk too. Eesh. Open level. And like I said, this is what I like about the fan. I probably haven't looked at this chart maybe since last time somebody asked me to, but the levels still hold. Bro, it used to be a fire stock until I don't know what happened. Earnings look like SPX. All right, I'll do XPX next. What? I deleted something wrong. There we go. All right, so as of right now, I'm gonna leave these old fan levels up. They still being respected. Um, God damn. All right, so 212. It went from 118 to 85 to now it's at 53. My goodness. Um, it had some buyers step in here, but it hasn't held up along with the rest of the market yet. We have I ain't even gonna look at the rest of the time frames 'cause I know it's bearish. Um, Slight uptrend right here. And all this could be recovery for right now. Um, let's go and kind of that. I don't want to go too sharp to the downside. So we give it a grace a grace area. But as of right now, this is what we want to watch for. This little consolidated zone right here seems to be kind of holding steady. Even if this trend right here breaks, we just could see some more consolidation here unless it breaks this floor below 53. Then we'll see some more movement down. I got a hard floor down here at 46.60. You're looking at $75 calls for June. I won't go no higher than this. I haven't looked at the strikes, but if they got a 70, I'll go a 70 just because with time it eventually hit there. You say June. All right, so here's June. Here's July. So let's just give it July 1st. So 70, at least by July 1st. 70 is still a good target. unless you get earnings down here and that drains it some more, and that's in May. But if you're gonna go out the money and you just gonna hold, at least go 70 by July. And if you just want to go deeper in the money, and I'll do 60. I'll do a 60 call by July 1st. It should hit. It should. But the risk to reward is down here at 47, 46.50, 47. That'll be the bottom for now. And see how this little pattern right here holds up. I mean, it look like a bearish pennant actually. So just be careful on that. It's gonna need to break above these highs to invalidate the trade. Um, Bearish engulfing candle right here. We set up the fibs. Take out 62.52. You want to get more technical, we can go to smaller time frame. It's approaching 1.618, which is that's a level for a reversal back to the upside. So it filled this gap right here. It's in a reversal zone. You can look for the retest back up to 58 and then possibly back up to the golden pocket, back up to the upside. Golden pocket is between 50% and 61.8%. So actually, with this candle right here, $60 range would be valid for a long strike price. And you can look for price to come back up here. It's still bearish until it actually breaks above this candle though right here. Above 62.41. So just watch that. Be careful. Dangerous downfall right now. We could see a small reversal back to the upside, but for the most part, it ain't looking too good until we take out these highs right here. And SPX. Bro, if you trade SPX, we actually got a trader, Maddie. She kills XPS on the daily. All right, so this is from the last kind of TA breakdown that we had on SPX, where I marked up some levels based off of old resistance level. Here was a kind of a pattern that we was watching. It broke trend, retested, and here we are now, coming back down. So this was the last trend that I drew up. It looks like we're coming back to retest these levels at this 5509 level. It bounced right here at 5573. This right here should have gave us everything that we needed to know. This is a little doji that kind of lets you know it's getting ready to reverse to the downside. Indecision candle. Let me see if I can pull it up real quick. Looking for 3 candle patterns. It's not. It could be an evening star. I'm trying to get it over. If you're learning how to read candlesticks, candle patterns, you have 3 candlestick patterns. And when you see kind of like those indecision candles up there just hanging out like that, sometimes you'll see them at the bottom. and sometimes you'll see them at the top. So you kind of see three candle patterns like this. You see a big one, a big candle. You see kind of a small doji, um, where the price action, the opening and closing is kind of within the same range. Then you'll see the reversal back to the upside, or you can see the same thing on here, and then the price moves back down to the downside. So candlestick formations and patterns, they are pretty helpful. Um, That's like I said, you can see like a evening star doji, or you can see a morning star abandoned baby, things of that nature. Morning star doji, Big G say you follow trying to make it. Yeah, he's the one that does the live trading chat in the morning in the Discord. But those are helpful patterns. We seeing this pattern right here on the daily. The price action and the closing, I mean the opening price and the closing price are around the same. And then you see the price action retest these prices and then basically flush itself down, following that, and we went into a 3 day sell off. So, uh, going into next week, it bounced here. We'll be watching how prices react here at the closing price. We could see a little retracement to the upside, maybe 30, maybe 50% retracement back to the upside. It's gonna have to take out these highs to invalidate um, this candle right here. If it doesn't get back above these highs, then you can play puts like the 50% level back to the downside, at least to retest these lows. Then once it breaks these lows, then we can look for the next level down to the downside, which will probably be somewhere around here. So either we're coming back lower, or we're going to see a sideways trade um, from these lows, probably 50% of this candle right here, until we actually take out these highs above 56.86. So that's just what we want to watch for SPX. Also, you want to watch the same thing for SPY also. So that's just what we're looking for. The market isn't looking pretty. If somebody told you that, the market's recovering, they lied to you. Um, Once you learn how to read these candlesticks, the price action, opening, closing prices, bearish 6 months so far. SPX opened up around 5,900. Right now we at 55.80. That's a long way down for SPX for a bearish 6 months so far. If we go to a 3 month candle, it's closing right now with the bearish engulfing candle. So we took out these highs from this one, and then we took out the lows tremendously on this one. So right now we're looking for any type of retracement is just going to be pretty much getting some of those gains back before the actual dump back down to the downside. So if we're reading opening and closing prices, here's what prices were agreed upon. Here's a prior closing price and then a prior opening price. Here's 50% of this candle just about, and you'll need to see prices get back above 57.59 in order for it to make the move back up. So this would be your area to where bulls will have to reclaim in order to make a push to get back above these closing prices. Well, this opening price in order to push this candle back up. And really this should be a 6 month candle. We'll need to see this to try to push back above here to go back into bullish mode going into the rest of the 6 months, which we have 3 months left. So the market isn't showing any strength right now. It's actually showing a lot of weakness, and we're flushing out lows right now, previous lows. So just another Henry. What's up, Big Doc? You expecting a bearish week for Liberation Day on Wednesday? I'm expecting a bearish next 3 months. Shit. If you ask me honestly, until we see some type of pickup in the market, I don't see nothing positive about this thing right now. If we taking out lows, previous lows, that's it's nothing good about that. That means people getting scared and they're gonna institutions are gonna start getting out more positions if they not already out. So I mean, it's not too much fun going on in the market right now. But like I said, these are some hard conditions to trade within right now. And whenever we start to get a nice push back up to the upside, it'd be all fun and games. But right now, we just timing entries on puts right now is the name of the game. You know, buy when the market flips back up to the upside, sell the rips. Especially once it gets to that 50 cent range, 50% range. Um, Smile profits and move on to the next. You not cook, bro. It's still plenty of time to pivot. I had a hard time this past week and a half with my timing. Um, everything that I called, I got stopped out the day of, and then the trade played out the following day. I watched list about 6 plays on the Max 7, and by Tuesday, just about all of them was over 50 to 70%. Like I screenshot and showed it to Cube Master, and everything that I was gonna get on took off that Monday and left. Like I had two Tesla plays that went for like 150%, a 245 and a 250 play that just went crazy. But that's just the market that we dealing with right now. Like it's either gonna force you to FOMO into the market or you just gonna miss the opportunities because you didn't get in early enough. So this is an extremely hard time to be into the market. Hey, you old school G man. Hey, buy shares. Leave it alone. Don't touch it. I just bought my mama some Netflix. I bought her some Netflix and I bought her some CrowdStrike. I just watched Netflix flush. I think it did a crazy flush Friday, and I just bought her some Netflix. Yeah, it opened up at 971 and closed at 933. So we gonna get some of that. Here's a buy zone right here. Buy zone right here. So I'm looking at companies that's not necessarily gonna be too heavily influenced by tariffs. And right now, companies like Google, companies like Meta, probably like CrowdStrike, um, I don't think that those companies are gonna be too heavily manipulated by the tariffs, but we'll see. I like CrowdStrike though. That's one of my favorites. CrowdStrike and Eli Lilly is probably one of my favorite ones to trade. Well, when the market gets like this, I miss Zom. I wasn't paying attention to Zom. Cube Master that's in the chat. He's been banging the table on it. But this would have been a excellent sector rotation stock. Once tech starts failing, the money has to flow somewhere. Sometimes it flows into uh, like pharma. Sometimes it flows into small caps. This time we've seen it flow into oil and gas. Just at the beginning of March, it was trading at 104. Right now we're at 117. Look like we wanted to push 122. That would have been a beautiful buy and hold for a 2 week span. And would have made a lot of money. But I've been so caught up in trying to trade tech that I just completely forgot about the sector rotation um, into oil and gas. I double checked Walmart and Costco, but they haven't been doing too well either. Um, Walmart hasn't done too well lately since this gap down right here. So it's just kind of holding, looking for this Florida break at 84. And then even Costco, I think Costco hasn't been doing too well either. Nope, it sold off pretty much around the same way Walmart did. You got some buyers stepping in right here around like 910, 920. But if this level right here holds, then we could be looking at a retest of $1,000 pretty soon on Costco. So that may be one of the safe havens that we got coming up pretty soon in the sector rotations. Costco, Zom looks nice. Um, I haven't. I don't know yet on Eli Lilly. It scared me last year because we got all the way down here like mid 700s, and it tested this floor level right here, 727. But this is normally one of my stocks that I go to for like big moves whenever it's down or I see tech failing. And this supply level right here scares me. Same way we saw up here and we traded and it held for a little bit before it finally came back down. Well, it took what from 10/24 all the way up to February for it to retest this gap down level right here. Um, so far since it broke down 2 days in a row, it retested somewhat 50% of this weekly candle. Yeah. So it retested halfway. It got back up here and it rejected back down to the downside. So we already have a trend that's been broken right there. So the only thing that we're looking at right now is a retest from the outside. So you can see it hit here and then come back down, or we can just see a complete flush from there. So I don't really see this being a safe haven right now, as far as stocks go. So it just depends on where everything's going. I think Exxon and a couple other gas stocks though are still looking good. Just keep eyes on that, even though it is kind of high right now. Yeah, it's pretty high. So, uh, I think I got most of everybody's tickers. Anybody else has anything they want checked out real quick? Think everybody good. INTC, Intel. Um, Yeesh. Appreciate it, family. No problem. Like I said, normally I try to give y'all one of my old videos to give y'all like the trading tips and stuff. But I just since I'm off today, that's very, very rare on a Saturday. I was like, how about I just hop on and then just break down some ticker levels, give some people some insight on what to look for next week. Um, Intel is still consolidating, very, very bearish at the moment. Gap down or supply levels, resistance, whatever you want to call it, is still below 28.86. 6 month candle shows strength actually. So this is a good thing. Um, it started building on previous 6 month closing prices. So this 6 month candle right here is actually a 6 month candle. Is actually headed toward another, well, before I say another 3 months. Okay, that 3 month candle is showing that it's good too, and it took out highs. Um, okay, I'll take that. I'll take that. So right now, I mean, Intel could be on to something. I'm not gonna say how much it might be on, but it looks good. It looks better than a lot of the other tickers that we've been looking at, and that's a part of the Mag 7 as of right now. So only thing that scares me, we had this dip right here. We had a small retracement and then another dip right there. Support as far as the weekly goes is sitting right there. So that's kind of like the floor at the moment. So yeah, the floor at the moment is kind of like at $18.51. If you wanted to grab something, it would be right there. Let's go back to a bigger frame. See if we can find some some more support. Six month. See if that works. All right, that works perfectly. So that's a nice trend right there. One touch, two touch, three touch, right there. On top of it having a bullish 3 month candle, well, a bullish 6 month candle, and then a bullish 3 month candle. So that's actually that's a nice bounce right there off of a trend line. That's actually a beautiful something. Is Intel something I should look into? Shares. I'm not gonna say just yet. Let me say that it does look good. Um, Even beginning this year, it looks nice. Like I said, here's the opening month. Let's see how it holds going into the summertime. Let's see how this 6 month candle holds up, because if we're actually just looking at it, um, it's hard to tell. This this isn't anything that we haven't saw before, because we have seen a lot of consolidation before in this area right here. So this normally is a nice area to pick up shares because it has a lot of strong support right here. As long as we don't just completely fall below here and then turn this into a resistance area, it could be a nice area to pick up shares. Long term shares, let me say that. I think they came out with some news about getting a new CEO, or I can't remember off the top of my head, but I think they came out with some news where they updated somebody. 1.9 billion after closing second phase of NAND memory. Intel shares fall amid board reshuffle to align expertise. I saw something, but okay, they got a new CEO, and they saying that they trying to compete with Nvidia. I think AMD is trying to compete with Nvidia too. I think AMD and Nvidia damn near the same price by now. So yeah, um, this is a strong area of support right here. So mm, bam to the daily. All right, so it's filling this gap back down here to the downside that's on the daily. Like I said, you see a lot of supply or resistance below 29, but then you're seeing a lot of buyers step in below here. They're taking small gaps to try to start to, fill in the money that was lost right here. So you got gaps here, here, and here now. Small one here. Right now the floor looks like it's about 1855, 1875, somewhere around there. That'd be the absolute bottom. That'd be where I would buy shares if I was to invest, um, on the ride back up to $29. Um, Here's the old support level as we see. We've seen price hover in between this fan level right here, which was about 30.75. So if we can get prices to go and moonshot back up here and reclaim this fan level here, this would be a nice setup. Even though it's gonna have to actually make a move up and then retest to hold this level here, this would be a nice attempt to flip supply and demand here in order to make that next shot up to about $40. So if you can weather the little loss, if it drops down from here to like mid $18, it wouldn't be bad. Um, Look at this little resistance right here. So all of this little chop zone that we saw over here is now affecting the price section over here. So this is what's stifling prices from moving up. It's gonna have to continue to push up, and we kind of have that ascending trend line right here. So I mean, it's showing that it's slowly breaking highs. So it's showing that these little gap ups right here are paying off because each time it spikes, it's slowly breaking above the past spikes highs. So we could get a little bit more and a little bit more until we finally can take out this $29 level here and then build above that to start retesting this 32 to 31 to $32 range and start to build above there. So now it's probably a decent time if you like the company to buy shares here and just kind of weather the storm right here, the consolidation. And as long as these little gaps keep popping up, something could line up good because earnings is right around the corner, 424. So we just have to see how that plays out and what pops up, um, going from there. So, um, real Chad, what's up, Chad? Uber. I said I was gonna be in 45 minutes, bro. It's been a minute, an hour 30. Time fly when you having fun, huh? All right, so this is something that I actually went over in the Discord earlier today. I had a little one-on-one with one of the members this morning, and we talked about Uber and just finding um, solid levels to trade on, supply and demand levels to trade on. So it doesn't take much. I tell people all the time, if you're learning technical analysis, the first thing that you want to start off with learning, just learn how to trade the charts without adding the indicators to it. I first started out 6 years ago. I traded stock RSI, traded RSI, EMAs, parabolic SAR. Um, I traded a ton of indicators and I made money using them. But the thing is, once you go into a market that's consolidating, the thing that happens with that is those different indicators start conflicting one another, and it sends you in like a paralysis state. You don't know whether it's going up or it's going down. So, um, if you're learning technical analysis, the first thing you want to learn is how to read a chart without all the extra stuff on there. So that way you know what you're actually looking at, and it can make sense of what you're doing. Other than that, you just relying on indicators, and that's why you see a lot of people get faked out or can't tell where the market's heading because they're not looking at the picture from a big enough standpoint. So, checking out Uber right here, IPO'd at 2019, between 47 and 35. And this is another thing. We looked at CoreWeave, just IPO. I went back and looked at a couple other stocks like ARM, Reddit. You have 6 months to let the price settle just to get the counters is going to show you the price action. It's going to show you the data. It's going to show you where they're negotiating prices. ARM took off, I think, 6 months after no, a year after it IPO. Here we got Uber. They still is trying to get the valuation kicked off. You have time to hop into these IPOs, people. Um, but so far, Uber has had a nice little uptrend, consolidation level here, and then to move up. We're back into another level of consolidation here. You got a bearish engulfing candle on this 6 months prior to last year's. Heading to this new year, we have an inside candle right now, so we haven't quite taken our highs or the lows, which means is we're gonna see some price contraction until it finally decides what it's gonna do. So if we break it down into the 3 month candles, um, looks like the consolidation is like here. So between 79 and 59. So right now we're just seeing like this straight. Here's your midline, like kind of like right there, because we're seeing a lot of opening and closing prices above here, and then we got a few below here. So if I made my line a little bit straighter, there we go. Okay, so we have a bullish 3 months so far, which is good. Like I said, it's outperforming the S&P and the rest of the Mag 7 right now. Monthly kind of had a decrease monthly, but we're still within a previous bullish candle. And then weekly, I think we had kind of a bad weekly, but here's 50% of this last nice little bullish candle here, which would also be support. So right now we're trading between 79 and 69. So a $9 difference, 70 and 79. You can see price action actually trade. So we want to see prices stay above here in order for the next move to the upside and actually start, chasing these highs at 87. If we get below here, like I said, we treat it like the RSI, the 50, and we get below this mid range, then we can start seeing prices trade back lower toward this $59 range. And I think we have on a daily. Well, had actually a gap down here at 43, 44. I'm not worried about that unless we actually get below these lows down here at $59. So, like I said, as of right now, we're holding up pretty decently. We just have to make sure that prices stay above this $70 range. If we break below here, then you can look for this to turn into go from support to resistance, and then watch for the move back down here towards this $59 level where we've seen previous support at. If we want to see price action go up, we need to see a breakout above here, a retest, supply and demand flip, because as of right now, we've been watching levels break out here. And instead of seeing another breakout and a rejection back down, we actually want to see prices break out above here, come back and retest this level, and then make the move out once it crushed these highs. So Uber's it's in the middle range right now as far as price action goes. Like I said, we're trading inside a previous bearish engulfing candle to January 2nd of 2024. So last year was kind of a bearish year a bearish 6 months. So we're trading inside of that. Right now we're a little bit above. Let's see. So right now we're a little bit above that 50% range of that candle, heading more toward that 38%. So um, we're right in the middle. It's right above that golden pocket. So prices can easily, if it goes back, like I said, below this 50, back down here. Um, Here's the lows right here at 54.98. So if it breaks down below, and actually now that I'm zoomed in, this is a partial fill gap. That's a partially filled gap, which means it only filled this. It's gonna come back down and want to fill the rest of this down at 58.73. So it might not actually retest these lows, which that'll be the target. Um, but it's gonna be bearish until we take out these highs above 87 for right now. So that'll definitely be what we'll be watching for on Uber as of right now. RX, can it kill Theta? Gotta make sense of my 1.5. Man, Oh, I'm not a fan of RXRX. Haven't been for a very long time. Been telling people leave this stock alone. Uh, yeah, it's look just big chop, big chop. If you're gonna buy shares, if you're gonna buy shares, it's $5 would be the floor right now, and it could go down as low as 360. Um, eesh. I wouldn't buy no more. Honestly, don't buy no more of this shit. Leave it alone, Chad. I know, hey, we family, but leave that shit alone. It ain't worth it. But yeah, the bottom right now is like mid $5. No, low $5, and it can drop as low as 367, 365. The ceiling has always been above 1050. It's always struggled to get above that, and I mean, is it still considered a pharmaceutical stock? RXRX, health technology, biotechnology. It's gonna need something. I don't know much about the company as far as the news goes, but it hasn't been a great trading stock unless you just want to make a quick penny off of, you know, cheap stocks. So just leave it alone, bro. Hey, well, there you go. Start selling covered calls. Smart. So yeah, like I said, floors at 5, dirt bottom floors at 365. Yeah. So, all right, man. I didn't held y'all long enough. We've been on here for an hour and almost 45 minutes. Um, chopping it up, looking at charts. We went over 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 stocks in almost 2 hours. Solid. Kathy bought 220,000 shares. I'm gonna leave my thoughts about Kathy Woods. She ain't no Warren Buffett. That's all I'm gonna say. She ain't no Buffett. But yeah. I think I think this market is we're looking at some sideways movement, and then we're probably looking at some more downside for the long term as of right now. So I appreciate you guys for all tapping in, chopping it up with me, giving me um, a Saturday to spend some time talking charts with you guys. And like I said, if you're looking for somewhere to, hang out, talk stock market talk, um, make some good solid live trades we're trying to make it in New Fish Big Pun. Check out our Discord. If you're on After Hours, go to my bio. The link's right there. Patreon is $10. Cheap. But this ain't about getting rich out people. This is about, protecting a community that we put together and making sure that it's healthy and that we thriving in it. So shout out to everybody part of the kingdom. We're getting it locked in. I'll tap in with you guys a little bit tomorrow when we do the podcast, and we'll lock in from there. See y'all. I'm out.